Ladies and gentlemen, we have major events happening this week with a speech from Fed Jerome Powell, non-farm payrolls, a bunch of earnings, and even smaller data points that are very important, like ISM manufacturing, initial jobless claims, factory orders, exports, imports, balance of trade data for January, and not to mention ISM services data. I will share with you what the markets are expecting for this data here in this video, and what I'm expecting for markets and Tesla this upcoming week. Let's acknowledge the obvious. Friday was a great day for markets. I think it was a bear market bounce. I think it was a bit of shorts covering, one of those aggressive rallies from the lows that you see during bear markets. The fact is, on Friday, you did not have any positive developments. In fact, things just got worse from a geopolitical standpoint in Washington. The data that came out, it just did not look good, but yet markets still rallied. And I do think we could bounce further from here, especially in stocks like Tesla that have fallen, Tesla's fallen 10 times more than the S&P. Like S&P was down 4%, Tesla was down 40%. Could you see Tesla bounce back quite a bit, especially given the comments that Elon Musk made over this weekend that Tesla could go up 1,000% from here, or Tesla's profits could go up 1,000%, roughly equals Tesla stock going up 1,000%, potentially more. Could that ignite a further rally in Tesla? Probably. I'm expecting Tesla stock this week could hit that 310 to 325 level before going under more pressure in the second half of this week as we start to get more of that economic data rolling in. I'm not optimistic that it's going to be strong. I think it's going to be weak. And I don't think the Fed is necessarily going to be in a rush to come to the market's rescue. And as some people have pointed out, the current administration even wants the stock market to fall a little bit. They obviously don't want a recession. I don't think. They don't necessarily want a bear market in stocks, but they do want markets to come down a little bit. They do want to push Treasury yields down to create a more business-friendly economy and really just allow people to get homes again and to go out and finance cars again. So we're going to talk about all of this in this upcoming week. I actually think the setup is okay for Tesla in the first half of the week. Again, we're going to be under a little bit more pressure in the second half of this upcoming week. And I do think ultimately the selling is probably not over. This is probably an opportunity, if I imagine, for hedge funds and institutions to unwind some of their long positions at slightly higher prices. That's what it felt like to me on Friday, and I wouldn't be surprised if that happens this week. And yes, as I have explained before, I do think this is a huge buying opportunity for Tesla. At these levels, I don't think you can go wrong buying Tesla. With Tesla down 40%, I do think you've priced in even some of that recession risk. Now, of course, if markets do fall further from here, Tesla will probably fall further as well. I'm targeting an ultimate low of around 250, which if we did go into like a really bad market dynamic, $200 per share could be in the cards as well. But there's no guarantees of that. You're down 40%. If you are bullish on Tesla long-term, you need to take advantage of that. You need to be fearful when others are greedy and greedy when others are fearful. And people are fearful. It is time to be greedy. Now, I am not a financial advisor. I'm not a financial planner. Again, I just told you Tesla stock potentially could fall from here another like 31.5%. I just told you that. That is a possibility. Down to $200, I doubt you could fall further from that. That's really a stretch. I think you'd have to see a recession, and probably a deep one. Like even a shallow recession's probably not going to send Tesla under 200. That would be a 60% decline from all-time highs. Then again, anything's possible. But here, I have been buying Tesla stock. And I plan to continue to buy Tesla, especially if the stock goes lower. Then I think that's really a, sell your kidney kind of opportunity. That said, let's go ahead and get into your economic data for this upcoming week. That's going to really be one of the big stories. You also have earnings, in which I'll share those with you as well. Now, considering Wall Street is nervous about a growth scare right now, this week's upcoming data is going to be very important. So starting off tomorrow, Monday morning, you will get the ISM manufacturing PMIs. Now, manufacturing PMIs are not as important as some of the other data, but it will be important nonetheless. But really, manufacturing's been in a recession for like years now. It's not going to be a big shocker if manufacturing data is bad tomorrow morning. You will get prices paid. That is arguably the most important metric. How is the inflation picture within manufacturing? You will get new orders, construction spending month over month. That could actually be pretty important. Employment data and some other smaller data sets. Fed Mausoleum will speak at 11:35 in the morning tomorrow as well. Tuesday morning, it's actually going to be the slowest day for economic data this week. You will get the RCM TIPP Economic Optimism Index, expecting that to move upwards. If that falls, again, that's a confidence problem, not exactly going to be great. Fed Williams will speak at 2:20 p.m. On Wednesday, you will get ISM Services PMI. This will be very important because services are 70-ish% of the economy. If services continue to weaken, that's not going to be great. Now, personal spending in this report did show that spending on services increased at a slower pace of 0.3% compared to the 0.7% the previous month. So there is some indications of services weakening. And if that is reflected in the ISM services PMIs, that's not going to be great. Okay. You will also get business activity, employment, new orders, and prices. Prices have been high in the service sector. We want to see that number come down. If that comes down, even with some weakness in the headline numbers, that may be seen as a positive for markets. Even though it's weaker activity, less inflation could offset that and be positive. At 2 p.m. on Wednesday, you will get the Fed Beige Book, something I really like to pay attention to. Jerome Powell said, I think it was the last press conference, maybe 2 press conferences ago, that you really should look at that if you want to understand how the Fed is looking or thinking about the economy. Okay. It basically tells you what business leaders and people in different Fed districts are saying about economic activity, something the Fed pays very close attention to. Now, on Thursday, you will get the balance of trade for January, exports and imports for January. This will give you a new estimate for GDP. Now, technically, you're going to get a new estimate coming Monday via the ISM manufacturing PMIs. The estimate that we got on Friday is now negative 1.5% for Q1. That's crazy bad. I don't think manufacturing is going to help us out too much. So you're really going to be leaning on that ISM services number and then your balance of trade, exports, and imports. Okay, that'll give you another update for GDP. Now, initial jobless claims on Thursday are expected to rise as high as 340,000. That's insane. I would argue that has to do with some government, layoffs, some of what Doge is doing. We're starting to think that could get reflected in the numbers a little bit. So a number like that would be not great for markets at all. You will get wholesale inventories month over month, expecting positive 0.7%. Again, that's one of the dynamics with tariffs. If you're like a GM or Ford or Nike or really any company that does a lot of business in foreign markets, you're probably over ordering right now. You're probably trying to get as much inventory as you possibly can because, again, once tariffs go into effect, which could be tomorrow at midnight, if there's no extension on Canada and Mexico, you're going to be in a better position to hoard as much inventory as possible right now. And that's part of what we've seen in some of the data last week. Now, Fed Waller will speak at 3:30 p.m. on Thursday. You get some data coming out from China, balance of trade, exports year over year, and imports year over year as well. Now, on Friday, you will have your big data. You will get the non-farm payrolls. You're expecting 133,000. I think that's a pretty high estimate considering some of the government layoffs. And really how this works is it's a survey, more or less. Okay. Now, there's record low participation in these non-farm payroll surveys. So how I'm kind of thinking about this is if the government laid people off, they're probably going to report that. So you could see the government reported layoffs a lot higher than what we've seen recently. And that could be where some of the weakness comes in. Now, the unemployment rate is expected to stay at about 4%. You will get average hourly earnings month over month, year over year, participation rate, average weekly hours, government payrolls, again, expecting negative 20,000 here, but that's where you could see a number even worse than that. Manufacturing payrolls expected positive 6,000, non-farm payrolls private expected at 170,000, which is wild because last month you were only at 111,000. So I think that estimate is probably way too high. So some weakness on Friday in the jobs numbers. It's going to be a positive for bonds. TLT, if you're long TLT, you're probably going to love that. But, stock market wise, may not be all too good. Now, you will get a lot of Fed speakers. Fed Bowman at 10:15 a.m. on Friday, Fed Williams at 10:45 a.m. on Friday, Fed Kugler at 12:20 p.m. on Friday, and Fed Jerome Powell at 12:30 p.m. on Friday. Jerome Powell is obviously going to be a huge catalyst, so really throughout the day on Friday, expect a lot of volatility and really expect the unexpected. Jerome Powell could do a U-turn if we do in fact have the tariffs deployed on Mexico, Canada, and maybe even China here this week, and we get a bad non-farm payrolls number, you could see the Fed start to sound more dovish. Before they actually flip to like cutting rates, long before that, you're going to have the Fed that starts to talk, more accommodative, right? That could happen this Friday. That could be a positive for markets. We will have to see how that evolves. Now, we will have some important earnings as well. Monday morning, you have Sonova, Hut 8, Plug, TG Therapeutics, and some others. Monday and after hours, you have NewScale, Okta, AST, Space Mobile, GitLab, Quantum SI, a couple other names. Tuesday pre-market, you have Target, Best Buy, AutoZone, PaySafe, EVgo, and some others. Target, Best Buy, obviously important because it tells you a little bit more about the consumer. Tuesday and after hours, CrowdStrike, Stem, Nordstrom, Box, Ross. Again, Ross is another one that can tell you a little something about the consumer as well. Wednesday pre-market, Abercrombie and Fitch, Foot Locker, OppFi, some others as well. Wednesday and after hours, you have Marvell, Rigetti, Zscaler, MongoDB, Viva, Victoria's Secret, Lending Tree. Thursday pre-market, JD.com, Cracker Barrel, Kroger, BJ's, Macy's, some other smaller names. Thursday, you have Broadcom, Big Bear AI, Costco, Gap, Hewlett Packard, Samsara, and some others. And then Friday, you just really some random companies there. So a big theme of this week is AI and retail. Okay, AI, Broadcom, Big Bear AI, Rigetti's like Quantum, but Mongo. Viva, I believe, has some AI properties there. GitLab, okay? So AI software, going to be in focus this week. Retailers, Target, Best Buy, Abercrombie, Foot Locker, to a lesser extent, like a Kroger's or a Costco, okay? Very important week of earnings that we have. Specifically, I want to look at the retailers because that'll tell us more about the economy, about the consumer. Walmart gave a warning about the consumer. I can't imagine Target is going to have good things to say about the consumer. And Costco, Kroger, that's kind of a toss-up. People still have to eat. As far as your expected earnings movers this week, some of the biggest releases, GitLab Monday is expected plus or minus 15%. Target, CrowdStrike, Best Buy sitting anywhere between 8 and 10%. Ross 7% up or down. Wednesday, MongoDB at 15%. Plus or minus. Marvell, Zscaler between 13 and 12%. Viva sitting at about 9% plus or minus. Broadcom at about 10% plus or minus. Costco down here at about 5%. Kroger's at about 6%. HPE at about 8 to 9%. So actually expecting some big movers this upcoming week. On other big news as well, Donald Trump has created an executive order to build a crypto strategic reserve that includes XRP, Solana, and Cardano. Also says that BTC and Ethereum as other valuable cryptocurrencies will be at the heart of the reserve. Also love Bitcoin and Ethereum. Now, what happened on Friday looked like a bear market rally or bear market bounce. We rallied for no reason. I think a lot of people were short and the tide started to turn a bit, and that kind of propelled the upside. I don't exactly think this was a justifiable bounce, and that's why it looked like a bear market bounce to me. There was really no good news on Friday. It was all bad news, and markets still rallied. And I do think we could move higher to that 50-day moving average around 597.86, about $3 of upside here for the SPY, and you probably find a little bit more resistance there. And until there's clarity on the economy, until the Fed pivots to being more dovish, or until tariffs are dropped, or at least we get more clarity on that, it's hard to imagine a positive short term for the SPY here, especially as recession concerns continue to build. And if this week's data is not good, suggesting maybe we are entering into some kind of substantially slower growth economy, that's where you see more potential downside in this scenario. And as Tom Lee said in this video, if the labor market does start to really deteriorate and the Fed is nervous about inflation reaccelerating, that's not exactly a great dynamic for stocks. Now, at this point, I think you just want to raise as much cash as possible. If we do get a large enough bounce, maybe some puts as a downside hedge could make some sense. But I think cash is king right now. And you want to stay in markets, like, not financial advice, but I'm not selling my portfolio here. If I'm wrong and stocks rip and do very well, you don't want to miss that. You just want to be in a position to capitalize on the downside if that happens. Like Warren Buffett, he's still mostly invested in markets, but he does have $335 billion in cash, a record, ready to go if we do get that downside. And we'll see. I mean, the setup doesn't look great from here, but there was definitely some momentum heading into Friday, the end of the day, and over this weekend. I mean, you did get Trump that signed the executive order on creating a strategic crypto reserve, kind of a market-friendly event. You have Cardano up 65%, Solana up 25%, Bitcoin's back above $92,000. That is kind of risk on heading into tomorrow. So as I've explained before, I do think the bounce for markets, the bounce for Tesla specifically, could bounce further from here. Like there's nothing that says you have to see, stocks come right back down after a bear market bounce. But I do think by later into the week, stocks are going to be under more pressure. I don't think, in other words, this is the moment where stocks go, oh wait, like August of 2024 when we had the yen flash crash. I don't think 3 days, 7 days later, you're going to be ripping through new all-time highs. I think that could take some time. And I think, again, you need more clarity on tariffs. We need a better understanding of what direction the economy is going in. And until we have that certainty, I don't feel confident in just making an outright bet that we're going to soar back to new all-time highs. But hey, crazier things have happened. We will see what happens. Now, hopefully you guys are better prepared for what we have in store this week in markets. Let me know if you are bullish, if you are bearish, what you're doing with your portfolio right now. Are you loading up on margin? Hopefully you're not. But if you are, let me know your thought process behind that. Are you buying some puts here? Are you unloading some positions that you don't exactly love with this bounce? What are you doing to prepare for the next couple of weeks and months? Thank you for watching. Enjoy the rest of your day, and I will see you in the next one.